Welcome back everybody. I hope you're enjoying the lessons, and I think today's session is really going to drastically change something for you. It's not only going to be able to help you identify trading opportunities, but it's also going to help you manage your expectations, help you to build on your patience and your discipline. Now, I was going to do a video of me making my morning coffee and walking around the block and showing you how I do my 20 minutes of meditation, but I don't think that's going to serve any purpose for your growth. So let's just get down to the technicals. Here we're looking at Euro USD, and what I want to do every single day and every single week, and this exercise is going to be a weekly exercise, is go to the pairs that I trade personally and break them down to identify tradable opportunities I could have taken advantage of but may have missed or just may not have taken. And you probably know, if you follow me on Instagram, you will see that I've been trading Euro USD a lot. It's a very beautiful pair, especially for beginners, and it just moves in a very, very beautiful way. So the first thing that I'm going to do, I'm going to go to my calendar and I'm just going to identify when the week starts, which is the 20th of April. So that's a Monday. And I'm just going to bring over my tool here, the vertical line, and I'm just going to go back to the 20th. So if you can see down the bottom that it says the 20th of April, and I'm just going to mark off the last day of the 19th, 4H candle, and then this is the data that I'm working with to the right. Now, what I want to anticipate, well, actually not anticipate, what I want to identify is that this market structure is clearly pushing to the downside. It's a sell by structure. There's no denying that. So for that reason, what I'm looking for this week is sells only. We're not going to get too advanced here and start looking for exhaustion trades and reversals. We're just going to be looking for continuations to keep this process and exercise simple so that we can train our pattern recognition and we can also identify tradable opportunities again in the future when they pop up. So now I've got that information from my 4H time frame, which is my structural time frame, identifying sell by structure. I'm now going to go over to my hourly time frame, and what I'm going to start to do is break this data down so that I can understand it in the best way. Now, granted, some of you may have different strategies and you may look at this data differently, but for me, I'm going to be recognizing this as part of my strategy, and then maybe you can pick up a tip or two. It's not about taking everything I tell you and trying to apply it 100%. It's about extracting what's going to work for you and then applying it to your advantage. So when I'm looking at this chart, as I said, from the 4H perspective, I know that this is a sell by structure. So I'm looking for sells only. So starting from the 20th, which is Monday, which is this data over here, I'm going to start to identify what's happening with the market structure. So first things first, I can see the market made a structural high. Now at this point, I'm identifying this level in the market as a potential level where price should come back to look for some sort of double top patterns, because if I'm looking for a sell, then what I want to see is price not breaking above this structure, showing some sort of rejection and then continuing to the downside. Now, I can see that happened, but at that stage, we can see price never broke that structure. So for me, until this low is broken, I'm not really going to be looking for sells or any sort of retest, because if price breaks this structure and then breaks back in, I could potentially be in a situation where I'm going to just be sitting in the range again. So what I'm going to do is identify a behavioral change. And as you can see here, we have a lower high pattern forming off of the previous structure. This is showing significant bearish pressure, a fail to break, but also an area where the bulls weren't able to rally this market to make the new higher high, and we have a lower high here. So for that reason, I'm going to mark this area on my chart as an area where I'm going to start looking for sellable opportunities on my pattern time frame. So I'm going to take that information and just simply put a box on it from where I believe there may be sellable opportunities to where that push phase ends. I'll continue with my analysis and we'll continue to look on and see what happens. I can see that price made a structural lower low, never broke it to the upside or to the downside. And this is indicating a obviously depletion in bearish pressure, and also indicating that the bulls haven't really taken over at this moment in time. Now, I'm only looking for sells. So for that reason, any buy structure, whether it be higher highs, higher lows, I'm going to ignore. I'm just going to continue focusing on the 4H structure, which is sell bias. So for that reason, I can see a higher high here in the market. I can see that price never made a lower low. We started to enter a range again. Then we had a breakout, a retest of the previous structure. And now we have an area here for potential sellable opportunities. But the only thing is, at this stage, the market structure is too bullish. So what I want to see is how the market reacts to in and around this level. Once we break this level, is there any selling opportunities? Well, what I can do now is I can mark the break of this structure, indicated by the strong momentum candle to the downside, and then I can take my rectangle tool after that breakout and I can do this. Draw this box down to where that momentum started, to when that momentum ended, and once we go down to our pattern time frame, we'll start to dissect this information to see if there's any tradable opportunities. Let's continue on with the analysis. So we see that price has continued to push to the upside. We're not worried about this data here. This does not become a double top simply because this market structure is too bullish. But once we have this evidence here of strong pressure to the downside, the bulls try to push up, strong wick rejections, we have a strong candle with an indecision candle. What I can do now is take this information right here and I can draw a box over it. And then what I can do again is once I dissect this information on the lower time frames to identify if there's any tradable opportunities. So now this is a simple exercise. I've identified structure on the 4H time frame as being bearish, as you can clearly see from this structure, down. Hourly time frame, I've taken this information and I've dissected structure and behavior and then look for areas in the market where possible sell opportunities were evident. And as you can clearly see, this week from Monday the 20th up to now, I have found 3 potential areas in the market where I could have been looking for tradable opportunities. The beauty of this is that I've eliminated buys, period. So I cannot get distracted by that and I cannot lose taking a buy because I'm not going to take a buy. So now I'm patiently waiting for those selling opportunities based on my criteria, based on my strategy, based on my ability to understand the market structure's movement. So now let's get down to the fun part. We now scale down to our 15-minute time frame, and all of you should be doing this, scaling down to your pattern time frame. And now we can start dissecting this information. Now remember this level here in the market, it was the lower high, which was indicating to me a sellable opportunity. Now with this structure in the market, it's clearly up here, so I'm not looking to sell this market at this moment in time. But once I have a breakout of that structure and I have a pullback and I have a wick rejection, this is a great opportunity for me to take a trade. So now that I identify that pin bar, I can now take my drawing tool. I will take all these trades as an instant execution, and let's say we place our stop loss either above this wick or this wick for a more passive entry as opposed to aggressive, and then we can see how this trade played out. So I'm trying to get here a 8 pip stop loss, giving me problems, and then we're always going for a 1 to 3, so 24 pips for that 1 to 3. Okay. Right. So now what I want to do is I want to draw this up and I want to say to myself, right, I saw that this was the lower high and the higher time frames, but at the moment the structure is too bullish. We haven't broken this structural level low. So is this a good time to sell this market here? Well, what I have to weigh up is there an opportunity for me to get to break even before price action gets to that structural level low, which is the range? And if it doesn't, then I can't take the trade just in case we bounce off of it. So we see here we have an 8 pip stop loss with a 7 pip range. So that means this trade becomes invalid. But look what we have here. We have strong momentum to the downside. We have a pullback into this level here as a retest. And now we have a structural level in the market which looks more significant for a selling opportunity. So let's just say we take the sell based on this pin bar. We see the pin bars close, multiple rejections, and we place our stop loss comfortably above structure. So we'll go for in this instance, an 8 pip stop loss, and we're always going for a 1 to 3 risk reward ratio. And then now we can gauge these results based off what happens here. So as you can clearly see, we have an area where we could have sold, but we didn't have enough range. But now we have a strong push to the downside. We have a retest of this area, a lower high, and now we take a 1 to 3 risk reward ratio trade. And as you can see, we win this trade. Beautiful analysis. 1 trade done. Eliminated one trade done. Let's continue to move on. Now what you'll do is move over to the next box, and it's very important that we highlight these boxes so we know what we're working with. We have this range again. We have this breakout of this range, and then the circle here is the area where we identified where the lower high could have formed. If you can see here, we have a beautiful push to the upside and a beautiful pin bar, and we're going to take this as an instant execution with the stop loss above this structure. So we're working with we don't want to make it too tight, so we'll make it 11 pip stop loss, and again we go for a 1 to 3 risk to reward ratio trade. So let's take a look at this, what happens with this trading opportunity. So the market structure pushed in our direction. We want to go break even at 1 to 1. So looking at this, this is 11 pips. So by the time price has got back down to this level here, we're locking this trade and break even. And let's see what happens. So we lock the trade in at break even in terms of management, and then we can see we may have been taken out here by spreads, but if not, for sure we would have been taken out break even here. So that's our second trade for this week. We have one win, one break even trade. Let's continue to analyze this market structure from this point on. The second part was this area here in the market where we identified a double top of the previous structure. We're not looking to take this double top because at the moment the market structure is too bullish, but notice what happens when we have this break of the structure. We have a beautiful lower high formation, and let's just see if there was a tradable opportunity here. I cannot see any significant evidences of a pin bar. We can see strong bullish pressure up, bearish down. I would say it would be too risky to take this as an instant execution, but if you wanted to take this as a sell stop, you possibly could have put your sell stop below the structure, went in for a 15 pip stop loss, and then in any instance, if the market structure continued to push up, you would have never got triggered, and if it continued to push down, then as you can see from this candle, you would have been triggered. So let's measure this up for a 1 to 3 risk to reward ratio trade, and let's see what the results are here. So we have the double top that we're not taking, the breaker structure, the lower high, sell stop entry, so we want to enter with momentum, and then as you can clearly see, we actually hit this target over here, which is pretty good. So now we're sitting at one win, one break even. We also have here another win, and that will do us for this session. So can you see how simple this exercise can be? Now there's 5 trading days in a week, Monday through to Friday, and if you are patiently waiting for those setups to form on your higher time frames, following market structure on the 4H, which is down, 1H, which is patterns to identify breakouts of consolidations or potential double tops with momentum shifts, and then looking for those trading opportunities, however you're trading them, you can easily eliminate bad trades, find good trades, identify trading opportunities once the momentum has shifted, looking for continued momentum once you see double tops, and then taking those trades. Now, only 3 trades for the week on EU, and these are strict, simple to find trading opportunities, nothing too advanced. And what are the results? 2 wins at 3R, so that's 6R with 1 break-even trade. So if you want to call it, take off some of the commissions, you finish your week on EU with 5R profit. Now imagine you have 3 or 4 or 5 pairs in your watch list. Imagine what you're going to learn from doing this exercise repeatedly every single week. Imagine how you're going to feel going into the weekend feeling good that even though you may have had a bad week, you are still able to identify good opportunities once your mind was clear and fresh. If you make this a daily routine, you make it a weekly routine, then I can promise you, you will not fail. You will learn to grow and continue to grow to identify your patterns, grow in faith, grow in confidence, so that you can execute without hesitation. And you can start to trust the process to understand that this is a numbers game and not a business of having to take trades every single day to try to make money. Let the setups come to you and then go in for the kill. And I hope this was useful. And as I said, sorry I didn't bring out my coffee and take you around the block with me, but I think this exercise and routine in itself is much more powerful than that. As I always say, if you enjoy the content, please smash that like button, subscribe, and until next time, take care for now.